So the first thing we're going to do is we're going to cover, just do a basic overview of the tools, some of the tools that we're going to use. And I will say that a lot of these, if you want more details on all of these tools and more of the typical application that I use for these tools outside of scalping for discretionary intraday trading and medium and longer term trading, it is advisable to get my advanced CD course for more details. So in this lesson, we're only just going to do a basic overview. Okay. So first of all, pivot levels. We're going to talk about now. The way that I typically use pivot levels is like this: is you see the market will move. It's like an elastic band. Each day, it's like two things: an elastic band and a battery. When dealing starts on any given day, we see that price will open, and let's just say that the battery is full. So the price will open, the battery will be full, and as dealing, this is, let's say, the open of the European session, and dealing will occur, and the market will move, and the elastic band will be stretched. As volume gets pumped into the market, the elastic band is stretched. Typically, the market will make a high for the day, and then more flows will come into the market, more consumer and speculative flows from hedge funds, insurance companies, and so forth. It's a very complicated, sophisticated instruments, swaps, options, futures, options and futures, and so forth will come into the market, and these flows will move from a high for the day, a low for the day, and eventually the flows will start to drain. So there's only a certain amount of volume that will typically move into the market on any given day, depending upon what the market is speculating on, whether there are some economic reports due out later in the week and so forth, and therefore price will move. And as we get toward the end of the day, typically these highs and lows have been established, and the market will move back into a consolidation before the Asian session or the next European session starts to pick up, and again an increase in flows come back into the market. So here we have what looks like an elastic band is stretching out, and then it will constrict. So the stretching out of the elastic band would be our range for the day as the market achieves a high for the day and a low for the day, and then comes back into a consolidation again before the following day. Now, the way I view the pivot levels is, of course, we'll open up, we'll have a central pivot for the day, and we'll have our levels of resistance and our levels of support. And effectively, what I like to do is any time that the market is down below the central pivot, at or below the central pivot, I would consider the market to be in a buy zone. And any time that the market is at or above the central pivot, I would consider the market to be in a sell zone. So what I mean by that is the market is stretching into this selling zone, and it is stretching its range into the selling zone, and I often will anticipate that the market will bounce or move off of one of these sell levels and move back in towards the central pivot, and likewise for the buy zone. And of course, what we're looking for these pivot levels to converge or come into alignment with other key levels, which we're going to talk about throughout this session. Just to give you an idea of what that looks like from a chart perspective, disregard these narrow pivots and these ones here that are quite compressed. These are compressed because they're taking Sunday's data, which is very little. So we'll just really look at these ones here on the 14th, 15th, 16th, and 17th. And what we have here is the dark red line is the central pivot for the day, and the lines outside of that, this would be R1, and this line down here would be S1, and of course the midpoints would be right at the midpoint in between the central pivot and the level of support, and the midpoint would be between the central pivot and the level of resistance, approximately here. As you can see here, as the market started out the day in the buy zone, and it moved up and moved nicely into the sell zone and then came back. And really the market moved in a range for the day. It just moved up, it came back, tested the lows and moved back into its range, consolidated into the next day of trading. And likewise, on the following day, we started in the buy zone, we moved up into the sell zone, moves down again to the level of first level support and back into a consolidation into the next day, right at or above the intraday high. We consolidate into the next day, starts in the sell zone, it moves down to the central pivot and back up and down, and then we start to see it come down and testing the previous day's low, moving into the day in the buy zone, and then it moves up toward the central pivot into the sell zone. So you can see here how the market, the price will open, and then the market will have a certain amount of flows that will push price around on an intraday level before consolidating into the next day. By the way, these vertical dotted lines are the separation of one day to the next at 0 hours GMT. Okay, so I just want you to understand here principally that we are typically looking to buy in the buy zone and sell in the sell zone, although that is not a hard and fast rule because this is trading. There are no hard and fast rules in trading. Okay? The only hard and fast rules that you must adhere to are your equity management rules. Taking a look at another example, this is a 1 hour chart, and again the vertical lines separate the days. We have the 14th, 15th, 16th, and 17th. The dark red line is the central pivot, so you see we are in the sell zone and price moves back toward the central pivot, effectively in a choppy consolidation. And price consolidates into the following day. We see the market makes a low for the day, a high for the day, and comes back. Okay, consolidates into the next day, comes down, makes a low for the day, a high for the day, and then consolidates into the following day. A low and a high, and then consolidation. I just want you to understand the elasticity, the range of the market, and the volatility of the market, just to give you a bit of a feel for that.